Hello, in this video we shall evaluate the attractiveness of BATA India shares as an investment opportunity. Rupee 1 invested in the BATA India shares in year 2010 has already converted itself into rupees 8. That's quite a handsome return. But what is even more important for us to know as investors is how does the future look like for the company? We shall try to answer this question in two parts. In the first part, we'll look at the prospects of the footwear industry in general and the role BATA India plays within it. Then we'll move on to the specific elements related to BATA India in terms of their past performance so that we can try to derive some insight into the future. Let's get started. Let me start by presenting some very exciting facts about the Indian footwear industry. Did you know that Indian footwear industry produces about 210 crore pairs a year? 90% of those pairs remain here in India and are consumed, while 10% are exported. India is the third largest consumer of the footwear, coming only third after USA and China. While there are a lot of shoes being produced here in India, an average Indian only holds about 2 pairs for himself as compared to 6 to 7 for their counterparts in the developed world. 55% of the Indian footwear industry is still unorganized, and hence the organized players are always looking for opportunity to grow their business share. In order to understand the industry from pricing and competition point of view, I wanted to see the famous e-commerce portal Flipkart and what kind of variety is available for the Indian consumers. I wanted to see what's available for men, women as well as the kids from footwear perspective. I was surprised to see the results. What we find is when I look at the different price points, the number of brands as well as the number of products which are available in the Indian market, the choice for the Indian consumers is massive. They are almost spoiled for choices here. Let us now turn our attention to BATA India. BATA India is about 52% owned by BATA Shoe Company, a multinational company which is based out of Switzerland. BATA India has 300% owned subsidiaries here in India, but from materiality point of view, the financials for those were not very big, and hence I looked at the consolidated financials for BATA India for the purpose of this video. BATA India has about 11 brands here in India, and what they have tried to do is try to tackle to all the different segments. They have a couple of brands for women, they have a couple of brands for men, and they even have a brand available for the kids. And now what's important for us to understand is what is the pricing strategy what the BATA India has been following. So what I try to do is try to recreate the price chart what we looked at earlier from the sub-segments point of view. And once again I pick, for example, bubblegummers, one of the brand BATA has for kids, and I try to again look in this particular segment what are the total number of brands, total number of products, their price range, and then I try to map the prices of BATA India onto it. What I see is bubblegummers, which is owned by BATA, comes towards the low end of the price range. BATA does have some other premium brands, and if I look at 3 or 4 other brands related to BATA, I can see they have tried to tackle to different price points dependent on the segment they are catering to. However, if I put all the products of BATA together, I do notice that the average selling price for their product is about 630 rupees. Being an Indian consumer, I think it is still towards the low to the mid range of the market, and hence BATA has very consciously chosen a certain pricing and certain kind of audience for its products. Next, I turn my attention over to the supply chain what BATA has. It purchases the raw material from certain suppliers. On the other hand, through the parent company, it has collaborated with some of the other known multinational brands. For example, Naturalizer is a brand from US, which is then kind of partnering with BATA India to bring the products here in India. Then there are 4 manufacturing plants which BATA has with about 10,000 employees. Then the products are sent over to the customer warehouses where the majority of the inventory of the company is kept. And then finally we come to the sales channels related to the company. There are 3 primary sales channels through which BATA is taking its products over to the consumers. There are about 1,500 stores of retail which are either owned by BATA or then owned by the franchises. I would like to highlight the fact here, not all of these 1500 stores are branded as BATA. BATA has also chose to bring in some of the separate stores for the brands like Naturalizer or even Hush Puppies. So they have a very clear focus on bringing the identity for each of these brands. Then the second segment of the customer what BATA has is towards the online channel. All they are trying to do is try to collaborate with Flipkart, Amazon, and even sell through their own website. Finally, they have the distributors, wholesalers, and the industrial side of the business, which is primarily trying to supply the goods to the distributors who can then further supply to the multi-product retailers. The exports of the company, which are not very significant, also house themselves in this segment. From materiality point of view, I would say bulk of the business of BATA is in the retail segment. Just to summarize now everything what we've learned about the industry as well as BATA, BATA has consciously taken a choice to be in the organized retail space. Whether it's good or bad, especially in the times like COVID, we'll discuss this risk later. But that's been the conscious strategy what the company has been following. It also looks with the number of designs, the types of designs the company is bringing, they are very much decided to focus on the young, energetic audience within India. Finally, BATA does have a very strong benefit of having a good parent in Switzerland, which also helps it to tie up with the other known brands across the world, and hence the offering within India is improving all the time. Now that we've learnt a bit more about the Indian footwear industry as well as BATA India, let us try to dig deeper into the past performance of BATA India. This would help us to make some informed inferences about the future of the company. We shall look at 6 or 7 parameters to evaluate this performance. Let us start with the capital allocation policy and the capital structure for BATA India. If I look at the dividend payout record, which is the amount of dividends what the company has been paying over the years to its shareholders, I see that BATA India pays out about 30% of its net earnings every year back to its shareholders. Said differently, about 70% of the earnings of the companies are retained back into the system. Further, I look at the sources of cash flow and the sources of the equity for the company. I notice that company has not been raising any new equity over last 10 years. What this essentially means is the equity base of the company has been increasing due to the retained earnings which have been plowed back into the business, which is the 70% which the company has not paid as dividend, and then company has used this retained earning both to pay back its debt as well as invest in the growth opportunities. So this is quite a beautiful record for the company because the debt to equity ratio of the company has been declining continuously over last 10 years. I rate the company's performance as superb on this particular parameter. Next, I turn my attention over to the growth metrics related to the company. Here, I try to look at the trends for the revenues, the net profit after tax, and the free cash flows for the company. Once again, in all these 3 graphs, you can see company has been gaining certain percentage growth each year. We really have to think about what's really driving this growth for the company across revenues, the net profit after tax, as well as the free cash flows. We need to think about the competitive advantages that the company possesses. As per me, there are 2 main advantages what the company has. One, BATA has a strong brand recognition here in India. Second, BATA also has another advantage of having a very solid parent behind in Switzerland, which also helps BATA India to collaborate with other American brands to bring new offerings over to the country. But at the end of the day, what we have to really monitor is the growth of the net profit after tax bringing some value over to the shareholders, especially when companies only paying out 30% of the profit as dividends. Here, I try to look at return on the capital employed as well as return on equity towards the shareholders. Here, I notice that the competitive advantages of the company along with the capital allocation record has been ensuring that the return the company has been generating on its capital, the return the company has been generating on its equity is way above the cost of capital for the company. What this essentially means is company is able to generate free cash flows which it is then able to use towards the new growth opportunities. Once again, I would rate the company's performance as quite good on this parameter. Next, I move towards the quality of the earnings. While we really look at different parameters to evaluate the quality of the earnings for the company, here I present to you a metric called excess cash margin. All I'm trying to do is the profits which have been reported by company in its profit and loss and the profits which are derived from the cash flows, how similar or different they are. What I consistently notice in case of BATA India is that the profits which are shown in profit and loss are really backed by the cash flows, which is quite a good sign. So again, I would say that the performance of the company has been good in terms of the quality of earnings, what it has been generating. It gives me a lot of comfort to see that companies' accounting policies are not trying to mislead the investors by producing the wrong results. Next, I move towards the quality of management. Here I try to look for parameters which try to give me insight about the conduct of the management. I would again say when I read the annual reports for the last 10 years, the quality of management seems to be quite good in general. There's a specific transaction I would like to highlight though. I find that every year BATA India is paying something called a technical collaboration fee towards another subsidiary which is based out of Singapore. It's a subsidiary of the parent company which is based in Switzerland. So what we really have to monitor is that why is BATA India paying 1% of its revenue each year towards this subsidiary in Singapore, and if this percentage is increasing over the years. I believe the transaction is linked to the transfer pricing policy wherein the company sitting in Switzerland is trying to move part of the profits of BATA India over to its global counterparts to leave the margins as per the transfer pricing. But what we really have to see is if these percentages are increasing over the years, and that would be a red alert for me. But in the present form, and if I look at the trend of the last 10 years, I would say the quality of the management has been quite reasonable. Once again, I rate the company's performance as good on this parameter. Next, I move towards the valuation of the company. Here, all I'm trying to do is evaluate the current market value of the company against really 9 or 10 different parameters. If I look across these 9 or 10 parameters, I think the company is quite expensive in terms of the value. So what we really have to evaluate is the company going to bring the promises what are really being shown in the valuation of the company? I am concerned about few risks about the company, which I'll discuss in the subsequent part. But I would say that on the valuation front, I'm not very comfortable, and hence I would rate the performance of the company as not so good on this particular parameter. Finally, I'll move towards the risks I see in the analysis of the BATA India. I basically identified 10 odd risks which you can really find on our website, but I would like to highlight a specific risk. The strategy of the company has been to form a retail heavy franchise. Company is investing heavily into retail stores, and that's something which is concerning me. The two reasons why I'm concerned about this strategy is even before COVID, the trend of the business moving towards online was increasing quite a lot. We have learned from some of the developed countries like USA, people are finding it difficult to attract people over to shopping malls and all. In such an environment, when BATA India is investing so heavily to build its retail presence, it will lead to more impact on its profit and loss in terms of the lease payments and so on. So this is one aspect which concerned me irrespective of COVID. Finally, I think the COVID also brought in the drawback which I was trying to highlight. When the business activity got shut down, malls were closed, BATA was still incurring the rental payments for the premises it had taken. Even though it was able to negotiate some of the rentals downward, it still had to make a loss in the Q1 of this year, primarily because the rental payments are still quite high. So this is one overall area where I'm concerned with the company, which is what's really going to be their strategy in this new normal when the percentage of the retail in the business might reduce. So to conclude our entire analysis of BATA India, we looked at these 6 or 7 parameters. I mark here in green the parameters which I'm comfortable with. I mark here in yellow, which is something I'm undecisive about, and I mark the areas in red which I'm really not comfortable with. Keeping all these aspects in mind, I'm not inclined towards buying BATA at its current valuation. I would like to wait and see how the management will evolve its strategy, according to this new normal which will be available after COVID. I would like to see the behavior of the management in terms of coming up with the new strategy for BATA India before I decide whether I want to invest in BATA India as an investment opportunity. So again, to conclude, I'm not okay to invest at the current valuations given some of these uncertainties we spoke about. In case you would like to get a copy of the report which we have generated through our proprietary tools, you can just write to me at rahul@refine.finance. You will find 35 to 40 odd parameters which we look through across the financials of the company to really find the things which work for the company as well as the things which don't work for the company. In the next video, I shall pick up another company in the footwear industry called Relaxo, and we'll try to carry out a similar analysis and see if Relaxo presents any better opportunity than BATA for investment purposes. Thank you.